Hey everyone, Dan Mortimer with eXp Realty bringing you another weekly real estate market update. This is for Henderson and Las Vegas real estate markets with data as of July 28th, 2025. It's crazy to think we're coming up on the end of the month. Again, we're just flying through this year. It's crazy. So let's go ahead and dive into the data for the last 7 days, and I'll share some of my thoughts on it as well. In the last 7 days, we had 925 new listings that hit the market. We had another 147 homes that came back on the market. We had 1,036 homes that had a price decrease of some kind. For those that are new to these videos, it could be $1, could be $100,000, could be anything in between, but 1,036 price decreases in the last 7 days, which is pretty well in line with kind of what we've been seeing the last few months, really. Getting into the under contracts, we had 294 homes go into under contract show status and another 411 that went into under contract no show status. So in total, about 705 by my count, compared to 925 new listings. So there is still a gap, but under contracts have held pretty steady. The number of new listings has dipped the last few weeks. Getting into the solds, we had 579 homes that went into sold status in the last week, and 61 homes that got put into coming soon status. For those that are new to the channel, coming soon basically is a pre-marketing status in our MLS. That means the home will be active on the market within the next 30 days or less. Usually it's quite a bit less. They just need to get photos figured out, remarks, things like that. Getting into the active inventory, as it stands, we have 7,514 single-family homes active on the market, 1,541 condos, and 1,185 townhouses. So inventory continues to climb. We knew that was going to happen. The under contracts have held pretty steady. The biggest challenge that we're seeing, and we've seen it for a few months now, is buyer cancellations, buyers backing out of deals. I just saw an article just a few days ago, specifically about new construction homes, and they are seeing a lot of cancellations as well. It's definitely something that's become more prevalent for a wide variety of reasons. First and foremost, buyers have more choices. So they may go under contract on a home, really like the home. Maybe it doesn't check all the boxes, but a week or two after they go under contract, while they're still within their contingency periods, they may see a more attractive option pop up at a better price, or maybe it's got some of the features that they're looking for that this home doesn't have, so they'll cancel and go to the other one. We also see people get cold feet because of large repairs. It could be loan terms. They're not happy with their interest rate. They're not comfortable with what their monthly payment's going to be. And those are things that they try to get estimates on. Lenders and agents try to prepare them ahead of time for closing costs and fees and prices and monthly payments and all that stuff, but it's tough to get the exact numbers until you go under contract on a property. Now, I don't want to suggest that a buyer should go under contract just to figure things out after the fact. I think you should be as prepared as possible when going into contract, because you have a seller on the other side of that deal that thinks that their home is going to get sold. They're trying to make plans, they're packing, they have, if the home is in an HOA community, a common interest community, they're going to have to order documents and pay for those documents up front. So don't go into a home purchase with the intention to think about it after the fact. Really be fully committed and negotiate and work in good faith to close the deal, but you do have some outs as well. So something to keep an eye on. We are still seeing the number of sales dip compared to last year. I'm very curious to see what July's numbers look like. I know a lot of buyers are frustrated because the inventory has climbed so much, but our median sale price for a single family home in June hit that record number again, 485,000. So I'm very curious to see what that looks like in July. The challenge with the monthly numbers is they're always trailing. They're always trailing. That's why I like to do these weekly updates, because it gives you it's still imperfect because it doesn't give us the exact current snapshot, but it at least shows us the last 7 days and gives us an idea of what's to come. So very interesting to see. And it's a very, very unique market that we're in. I know a lot of people like to compare it to 2008. The biggest differences to me between the market we're in now and 2008, for one, the prices are double. Back in 2008, when people were getting their homes foreclosed on and investors were scooping them up, home prices in Las Vegas were maybe even less than half of what they are now. The big difference too is in leading up to 2008, you had a ton of homeowners that had loans on what we call bad paper. That's just a little phrase, but basically what it means is buyers, when you were qualifying for a mortgage back then, there were incentives for lenders and for banks to lend out money, so they were not putting people through the normal paces that we see today. Verifying income, verifying job, tax returns, submitting pay stubs, all this stuff that you have to put in now to qualify. It's a very rigorous process for anybody that's gone through it with a lender. They have a lot of documentation that they need from you because they need to make sure that your debt to income ratio is in line, that you don't have, outstanding payments, that your credit's good. There's a lot of checks that they go through to make sure that you qualify well before the loan closes and you get into that home. Whereas back in 2000, prior to 2007, there were a lot of, they call them no income, no job applications, ninja loans. They had adjustable interest rate mortgages. They had mortgages that had a low interest rate and a balloon payment. Balloon payment basically means you keep a low price for a few years. Maybe you're only paying the interest on the home, and then after whatever it is, 3, 5, 7 years, there's a balloon payment where basically you have to pay the entire loan off at that time. A lot of people got into stuff. They weren't necessarily aware of it, or maybe they were aware of it and just thought they would sell the home. But that's what led to the wave of foreclosures in 2008. A lot of bad loans, a lot of people not qualified to have a home that couldn't afford either the increase in the interest rate or the balloon payment, so they lost their homes. Now, there were other cases too, but generally speaking, that's one of the leading factors. We have very few of those now. The other thing is, because the home prices have doubled, people that have bought homes really going back to 2008, 2009 to even up until probably 2022, 2023, those homeowners have equity. They're sitting on a lot of equity. They're not in a situation where their payments are drastically changing. They're comfortable. They've got a low interest rate. They've got maybe $100,000, couple $100,000 in equity, maybe even more in some cases. And so if the home prices dip a little bit, they can either decide to take a little bit less equity into their next home, or they can pull the property off the market. And I think that's what we're seeing in Las Vegas to a certain extent, but nationwide, we're really seeing it. A lot of homeowners are saying, all right, I'm not getting my price. Seems like competition's picking up. I'm going to pull my home off the market and wait for things to get a little bit more balanced out until the buyer demand picks up. So we're definitely seeing a lot more of that. That doesn't mean that prices are not going to dip. We may still see prices dip maybe a couple percent, maybe more. Nobody really knows exactly what's going to happen. But in Las Vegas in particular, because we have so many people coming in, we have so many people that want to purchase homes, it's just not financially feasible for them. Once we see some give on the interest rates, some of that pent-up demand that we have is likely going to come back into the market. Now, I don't want to suggest that it's going to be like 2021 or anything like that, but we are definitely going to see buyer activity pick back up. The other thing to keep an eye on, though, is tourism. That's something that for a lot of other markets doesn't necessarily have as big of an impact on their housing market, but here in Las Vegas, we have a lot of people living here that rely heavily on tourism. Not just, people dealing tables and people working casinos, but a lot of the other people, restaurants, small business owners that get support from tourists that use that income to purchase a home. And so with tourism being down, that can impact their ability to qualify to purchase. Again, because we don't do loans on bad paper. If that was the case, people would be still flooding the market. They wouldn't care as much about the price of homes. But because their income is impacted by those low tourism numbers, maybe something to keep an eye on. Hopefully we see things turn around and we see activity pick up. But with the general uneasiness in our economy over the last several months, I think a lot of people are sitting back just to see what happens with interest rates, to see what happens with the economy, and if there's any kind of fallout that might impact the housing market. Again, some of it's tied in, a lot of it isn't, but that's not going to cause someone to say, yes, I'm going to buy a home, even though all the news is bad. It still has an effect, even if it doesn't directly impact the housing market, some of those economic trends. So it'll be interesting to see how things play out this week. Again, I'm really curious now that we're at the end of July to see what the sale numbers look like, the median sale price, all that stuff. So hope you guys got some value from this video. I will see you at the next one.